You've heard of the recent bank collapse in the US, UK, and Switzerland. Luckily, Nigerian banks are insulated against such crises. Governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, told journalists at the MPC meeting press briefing in March that Nigerian banks remain resilient, adding that the financial soundness indicators in the banking industry look good, as the CBN had put in place certain prudential guidelines to protect the banks from any financial contagion. We'll be discussing this matter further with an expert in today's episode, as well as the latest CBN circular regarding unclaimed funds in dormant bank accounts for up to 10 years, which are to be transferred into a trust fund that will be domiciled at the Apex Bank for investment in treasury bills. But before that, we have the concluding part of our expert analysis from the last episode on rising inflation, IMF recommendation, and Nigeria's economic growth after this short break. Stay with us. Welcome back. In the previous episode, we started a discussion with economist and chief consultant at BAA Consult, Dr. Biodun Adedipe, on putting Nigeria on the path of economic stability and economic growth. Here's the concluding part.
So when I saw a train come all the way from China to UK, I was on a short holiday in UK at the time, arrived in UK with manufactured goods. My mind went back to Nigeria. If a train can carry manufacturers all the way from China to England, by all means, that means the investment in railway and roads that they began in 2004 and the commitment to inland container depots, which are dry ports, have actually paid off for China. So if we want to also do the same, we must look at those three in Nigeria so that factories can be sited everywhere, not just within the Lagos-Ibadan Expressway corridor or the Ogun State corridor. It needs to be throughout the nation. Okay, if we do that, we strengthen domestic manufacturing, and that by all means we also reduce our dependence on imports. So the bill of 1.8 trillion per month that we had in 2022, we can actually reduce that significantly within the space of 4 years of the new administration. And of course, the third one we say is about exports. Manufacturing, there we look at two things. You are producing domestically, not only to supply the local market, but you're actually producing for the export market. And there's no rocket science to that. Let's focus on Africa, okay, in the light of African Continental Free Trade Agreement. And that's okay. If there is open border within Africa, what do these other African countries import from outside Africa? Is there a way Nigerian government can also strengthen manufacturers of those items so that we now outcompete those countries from which those African nations import from? It's not rocket science. So, but that is what governments all around the world do. You make a choice of what you want to focus on, and then you push resources in that direction because you want to solve the fundamental problem. I will leave it at those three for now.
Thank you. You mentioned China, so I want us to talk about the Chinese currency, the renminbi, that is gaining more acceptance on the international market. Can this development be beneficial to the Nigerian economy, considering that we have high volume of trade with China? And again, should our foreign reserves be held in the Chinese currency going forward?
Excellent question. Now, the first time I encountered this was sometime in 1997, when there were conversations about the euro coming on. Okay. And the question was asked, I was working with some senior people in the Central Bank of Nigeria with respect to our external debt. And the argument then was that if the euro came on as a new currency in the global monetary system, how will euro likely grow in strength vis-a-vis the US dollar? That was what we were interrogating at the time. And we said, okay, if that happened, it will mean that any time the dollar strengthened or weakened without any change in our debt stock, the obligations that Nigeria carries will become bigger or smaller. So we then talked about diversification of our external reserves at the time, And also, we said it's also an important thing to consider with another currency strengthening and now competing with the dollar. But for us today in Nigeria, I think you mentioned what is very important to us, the direction of trade. Okay, if our trade with China has expanded in the last couple of years, the commonsensical position in terms of currency management will be for us to consider that instead of treating the renminbi as a third currency, because that's the arrangement we run with now. I want to buy something from China, I buy dollars first, and then convert dollars to renminbi, okay? Which means I'm treating it as a third currency. So now, as the renminbi becomes important in global trade and also in flows, in fact, it serves two major purposes. One is accounting, the second is for transactions, okay? So if you look at it from those two perspectives, it will make a lot of sense for Nigeria to begin also to look at how we manage our external reserves. Maybe a certain portion of that to be maintained in renminbi. And that is what we support our external trade, especially that we are doing more with China on an ongoing basis. And it's not peculiar to Nigeria. It's a global phenomenon. When you interrogate global trade, as we speak now, two patterns have evolved. China has become more important, of course, over the last couple of decades. But secondly, is that exports have been reduced to what we now call a new manufacturing is happening in most of the target markets for those manufactured exports. Interestingly, Nigeria happens to be one of those. So what we now call new manufacturing in Nigeria is in line with this. So all those things we used to import, there are now producers who want to have their factories in Nigeria to produce and service the local market and also produce for the African market. So if you look at it from that perspective, I will strongly, advocate that we maintain a portion of our external reserve also in renminbi, that we support our trade with China.
All right. Many thanks for your time and your insights, sir.
It's my pleasure, and thank you so very much for having me.
Nigeria is a rich nation of green land, rich resources, countless crops and commodities sufficient to feed and provide a means of livelihood for her teeming population. Chin up, Nigeria, the giant of Africa. Exciting times are here. We can be self-reliant and grow our economy if we work together to explore our potential. It takes a whole nation. Let us get involved. Buy Nigerian to grow Nigeria.
Thank you for staying tuned. This is From the CBN, a weekly program that brings to you reports and expert analysis of the actions, policies, events, and economic initiatives of the Central Bank of Nigeria, CBN. The recent collapse of Silicon Valley Bank, Signature Bank, and Credit Suisse in the US and Switzerland, respectively, has raised concern over stability of the global banking system and exposure of domestic institutions to such developments. Here in Nigeria, the CBN governor has assured that bank depositors have nothing to worry about, as measures have long been put in place to forestall run-on banks in the country. I discussed this issue earlier with economist and chairman, Chartered Institute of Bankers of Nigeria, CIBN, Abuja branch, Professor Uche Uwaleke.
Professor Uche Uwaleke joins us this afternoon on the program. Thank you for joining us, Prof.
Thanks so much for inviting me.
All right. So recently there was a scare of global financial contagion from bank failures in the United States and Switzerland. And thankfully, the CBN confirmed that during the March MPC meeting press briefing that no Nigerian bank is exposed. So tell us how Nigerian institutions such as banks and even capital markets get exposed to such happenings outside the shores of the country.
Well, let me start on the sharing news that our banks are relatively okay and immune from the crisis in the US and Switzerland. If you go by the revelation made by the central bank governor during the last MPC meeting, in terms of prudential ratios, our banking system is strong. Non-performing loans are within the threshold, within 5% threshold, at about 4.2%. Liquidity ratios for banks on the average in excess of the threshold, about 40% now, 43% for the banks. And capital adequacy ratios for banks in the region of 13.7%. So when you look at this, it tells you that the banks have not been negatively affected by what has gone on, particularly in the US and Swiss. Now, if you look at I want to draw a parallel here. If you go back to 2007, 2008, the global financial crisis, how did it affect our banks? How did it affect our markets, financial markets, in general? Recall that the housing market in the US, had a serious challenge. And as a result of that mortgage crisis, it's spilled over to many economies, including Europe and, of course, Africa. So what happened was that investors from these countries were pulling out their investments from, particularly emerging economies, frontier economies, including Nigeria. So when they pulled out, because of the difficulties they were having in the US, and they pulled out their funds from our market, our stock market. Okay, so we had a stock market, a near stock market crash in 2008. And because at that time, our banks were seriously exposed to the stock market, the proportion of banks then in relation to market capitalization was way higher than what it is today. And banks too at that time had given out loans, what is called margin loans, to institutional investors, to even stockbrokers to buy stocks. So these margin loans, many of them, of course, went bad. So banks were exposed to the stock market. Banks were also exposed to the oil and gas sector. Recall at that time too, about the same time, oil price fell. And because crude oil price fell, a lot of issues also arose in the oil sector. And that it also affected the loans that the banks had given out to particularly oil marketing companies. So that affected the banks. Recall too that was partly what led to the creation of the AMCOM. And at that time, the central bank also had to intervene by pumping some money into the banking sector in order to stabilize it. But the situation is different today. It's not exactly what we have today. That level of connectivity we had in 2008 is no more the same today. Is a case of a particular bank that is exposed to a particular sector. So the impact we are likely to have in Nigeria, will have to do with our tech firms, our startup firms. Nigeria is said to have over 3,000 of them as of December 2022. And Nigeria is also home to major unicorns in Africa. Okay, so some of these companies have put their funds with Silicon Valley Bank, and these are companies that are going to be, affected. But I don't see it having a contagion, effect on our banking system.
Okay, still on the banking system in Nigeria, one financial text defines a dormant account as an account that had no financial activity for a long period of time, except for the posting of interest, and that after the dormancy period, the account becomes the unclaimed property of the state if attempts to reach the rightful owner fails. Now, do Nigerian banks contact owners of dormant bank accounts? And why are some banks unhappy with the latest CBN directive concerning dormant accounts? Tell us your thoughts, what you know about this.
What the central bank is saying is that for accounts that have been dormant for 10 years, inactive for 10 years, such accounts will now be warehoused by the central bank in a fund known as the Unclaimed Balances Trust Fund, or the pool fund. And the central bank says that it intends to invest such funds in government securities, such as treasury bills. For me, this is about unclaimed assets, generally, and this is not the first time this issue is coming up. I recall that some time ago, the Finance Act 2020 also mentioned it, talked about unclaimed assets, including unclaimed dividends and unclaimed bank accounts. But I understand that there is a case that's in court in connection with that, and that is why it has not become operational. A case taken to, or rather brought to the court by a non-governmental body, the SERAP, and there's an order, halting commencement. That order has not been vacated. So now the central bank is coming up with this. Of course, it's an exposure draft. Central bank is trying to seek people's opinion on it, stakeholders, before it becomes operational. So what I have to say here is that Nigeria is not the only country where this is being considered. We have unclaimed assets laws in some countries like Australia, Canada, even in Kenya, and in the UK. In UK, for example, dormant accounts that are up to 15 years, okay, again become pass on to transfer to a fund. In Kenya, there is even an unclaimed asset financial authority, an institution set up specifically to take over unclaimed assets generally, and dormant accounts. So of course, it's not just dormant accounts. They're also talking about unclaimed salaries, unclaimed wages, unclaimed commissions. Okay, you are pulling these funds are dormant. They're lying in people's accounts. So government pulls them and then invest them in things that will benefit the society. That's the strong argument for setting up an unclaimed trust fund. Okay, another thing that people say, or another argument for it, is that it will reduce corruption, associated with such dormant funds. When you have huge dormant funds, lying idle, okay, of course, it's prone to corruption by the institutions that are holding such funds. But of course, the argument against this kind of arrangement is that our banking system today, a lot of reliance is also placed on these unclaimed funds. And if you pull these unclaimed funds from the banking system today, some banks may, really feel it, and it could even result in some of the banks, becoming distressed, because some of these banks have huge amounts of these unclaimed funds, particularly the old generation banks. So if you take out unclaimed funds, unclaimed dormant bank accounts from these banks, it will affect their operations, because remember the fact that they are strong today and they make deposits is also because they have these unclaimed funds. So as I said, we have arguments for and arguments against. My position is that maybe implementation of this can wait. The banks are still going through difficult times, particularly on account of the currency redesign exercise.
Okay, moving away from banking issues now. The CBN has projected that the Nigerian economy will grow by 3.03% this year on account of available data and forecast for key macroeconomic variables. Nigeria seems to be in a better state compared to other countries economically. How do you think this is so?
Well, I think the projection is realistic. 3.03% is realistic. Recall that even the federal government is projecting 3.37%. The federal government's projection is way higher than what the central bank is projecting. And the IMF too, the recent forecast by the IMF is putting our GDP growth rate for the year at 3.2%. So again, that's way higher than what the central bank is projecting. I think it is realistic considering the fact that last year GDP came in at 3.1%, and the GDP growth rate since COVID has been driven more by the non-oil sector. The oil sector is in a negative territory. So the financial services sector in particular, the ICT sector, trade, these are sectors that are powering the economy. Generally, the services sector, okay? We are still having issues with the manufacturing sector that is still in negative territory. We are still having, yes, issues even with the agri sector. Agri sector is positive, but it's still growing at less than 3%. So there's still room for growth there. But I think that following a successful transition, of power to a new government, I expect that the oil sector will also come up. I expect to see more improvements in crude oil production. Part of why oil sector has been down is because crude oil output is low, below what we usually put in the budget. But if we have improvements in crude oil output with the crude oil price that is still favorable, I'm sure we'll have more revenue. GDP contribution from oil sector will improve, and especially with the removal of if oil subsidy goes, for example, and we have more investments in the oil industry, the downstream oil industry, of course, GDP will improve. So I see the growth coming again more from the non-oil sector, the trade, ICT, financial services sector. And I also see a lot of improvements, even in the real sector, particularly, as I said, with the smooth transition that we are likely going to have to the next, the next government. So once there's this smooth transition, because I want to emphasize it, once we have a smooth transition, that will boost the confidence of investors, not only local investors, international investors. So I expect to see more foreign investors coming into Nigeria before the end of the year. I expect to see a bullish stock market, especially towards the last quarter of the year. And overall, I think the projection of 3.03%, will materialize. It's realistic. We are going to achieve that. Given what we have, what we were able to do in 2022.
All right, Professor Uche Uwaleke, it's been a pleasure speaking with you. Many thanks for your time and your insights.
My pleasure. Thank you so much.
That's all from the CBN this week. Be careful not to fall for any fraudulent recruitment portal or loan schemes purportedly from the Central Bank of Nigeria. Get your information from trusted sources always. Report unresolved banking issues to the CBN Consumer Protection Department using the email cpd@cbn.gov.ng. Attach relevant documents. Call the CBN Contact Center on the phone line +234 700 2255 226. Local call rates may apply. Write to us through the email address fromthecbn@gmail.com. Follow us on Facebook, YouTube, Instagram, and Twitter for updates and to watch uploaded episodes of the program. We invite you to join us again next time. I'm Oliye Misi Dada. Stay safe. Bye for now.